Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 11th of August 2019, and we're providing our gold and silver weekly update for the week ending the 9th of August. We shall also be commenting on the reasons behind the recent surge in gold and silver prices, why technical analysts believe prices will fall back early next week but rise later in the week, and draw your attention to our weekly webinar where we discussed the death of Epstein, North Korea and gun control, amongst other subjects, which lasted for over 2 hours. Let's investigate. Gold rose $56 last week, from $1,440 to $1,496, having hit a high of $1,509 and a low of $1,437. In sterling terms, gold finished the week at £1,244, that's up £59. And in euros it closed at €1,335, that's up €39. Silver rose 77 cents, from $16.20 to $16.97, having hit a high of $17.23 and a low of $16.15. In sterling terms, it closed at £14.11, that's up 78 pence. And in euros, it closed at €15.14, that's up 0.57 euros. The gold to silver ratio fell slightly from 88.8 to 1 to 88.2 to 1. The Dow Jones closed on Friday at 26,287, down 90 points on the day and down 198 points on the week, although it had been much lower. And the Nasdaq closed at 7,959, down 80 points on the day and down 45 points on the week. And the S&P 500 closed at 2,918, down 19 points on the day and down 14 points on the week. Good news for drivers, Brent crude fell $3.36 from $61.89 to $58.53, and US light crude fell $1.16 from $55.66 to $54.50. The dollar index stands at 97.49, that's down 0.58 on the week. On Monday, we began the reporting week with disappointing ISM non-manufacturing figures for July, which came in at 53.7%, almost 2% lower against estimates of 55.5%. And consumer credit was down compared with the previous month from $18 billion to $15 billion. But Monday was exciting for other reasons. Yes, whilst it may seem like an age ago, President Trump tweeted that he would be imposing an additional 10% tariffs on virtually all Chinese imports, some $300 billion worth, with effect from the 1st of September, resulting in a reversal of dollar strength, raising gold and silver prices and adversely affecting stocks. To add fuel to the fire, he also announced to reporters that he was contemplating raising those tariffs even further to an eye-watering 25%. Well, this began the inevitable rise of gold and silver prices almost from the opening. Then the Chinese devalued the yuan, pushing it below the 7-to-1 ratio it has held against the US dollar for the first time in 10 years, resulting in the US administration accusing China of being a currency manipulator. How else did they expect China to respond to an increase in tariffs? Now, we have been saying for weeks and months that China will do whatever it takes to support its economic growth. And if that means QE, currency devaluation, increased government spending, it's whatever it takes. And we have to bear in mind that its leadership is also not truly answerable to its electorate, unlike the United States. Then on Tuesday, President Trump imposed sweeping sanctions on the Venezuelan government, freezing its assets in the US and barring transactions with it, thereby causing more destabilization. He also called on the Fed chair to reduce interest rates, quote, much further and much faster, unquote, thereby again undermining the US dollar, though ironically helping stock markets, which currently would welcome lower rates. Then the third strike occurred. On Wednesday, 3 central banks cut their rates. The Bank of Thailand cut rates by 25 basis points to 1.5%, where markets were expecting no decrease at all. The Reserve Bank of New Zealand declared a 50 basis point rate cut to 1%, whereas the market was only expecting a 25 basis point reduction. And the Reserve Bank of India adopted a 35 basis point cut to 5.4%, where again only 25 basis points were expected. These cuts sent the yield on the 10-year Treasury note, which is used as a benchmark for mortgage rates and auto loans, falling to a low of 1.595%, the lowest since autumn 2016. The yield on the 30-year Treasury bond bottomed around 2.12%, near its all-time low reached again in 2016. Similarly, rates in Germany and the United Kingdom clinched all-time lows across the board. This pushed gold above the $1,500 level for the first time in over 6 years, and silver above $17, and many pundits expressing that these have much further to rise, essentially because of the uncertainty of the trade dispute with China, and other banks now feeling compelled to reduce their rates and diminish their currency values in order to compete with the reducing level of trade that is being experienced right now. We ourselves, who saw gold not exceeding $1,550 this year, have had to revise our estimates by up to $100 if the China dispute is not resolved, and our $17.50 silver peak for 2019 has been revised to $18.50. Though we did add that if President Trump keeps poking the bear and deliberately weighing down on trade with additional tariffs and sanctions, then an additional $200 could be added to the gold price, and if that happened, another $4 to the silver price in 2020. Having said that, we would like to think that some common sense will prevail that reminds the President that the purpose of these sanctions and tariffs were to bring people to the negotiating table, not to result in an all-out trade war where no one benefits, and in fact could be more harmful to the United States as well as the global economy, as it would almost then certainly result in the election of a new Democrat president in 2020, which we suspect the Chinese are willing to wait for. A further example of the deterioration in the relationship between China and the US can be seen with the US calling China a, quote, thuggish regime, unquote, over China's dispute with Hong Kong. President Trump also stated on Friday at a White House press conference that, quote, I'm not ready to make a deal, unquote, with China, hinting that he may cancel next month's trade talks. He added that he wouldn't do business with Chinese technology firm Huawei, while repeating many of his criticisms of China reneging on its commitments. So, the question we have to ask ourselves and attempt to assess is how much is this just political rhetoric, and how much can actually lead into a long-lasting trade war, which, if it is too elongated, will ultimately result in a currency war, with not only interest rates falling further, but currencies consistently devaluing in order to attempt to gain some form of competitive economic advantage. Politics aside, which frankly is difficult to ignore at the moment, let us take a look at technical traders' views on where we are with both gold and silver. Well, Friday saw gold oscillate around the 1500 level, closing just below it. 1450 offers a high level of support, which is where the 50-day EMA is moving towards. The short-term range, according to technical analysts, is between 1412 and 1522, and that we should expect further weakness on Monday, and perhaps up until the substantial amount of economic data is published on Thursday. So the general consensus is that one should see these pullbacks as positive opportunities for purchasing, as many technical traders believe that future interest rate cuts will further support the gold price. Silver appears to meet significant resistance at the $17 level, which it closed marginally below on Friday. Support seems to be very strong at the $16 level and quite strong at $16.50. And if silver can manage to push above $17 and hold, then it would quickly go to $17.50 and potentially $18. Like gold, the 50-day EMA is heading towards this lower figure, and in silver case, $16. And close to this level, many interested buyers are likely to re-enter the market. So technically speaking, we are to expect some weakness in both gold and silver early next week. But we also have to be mindful that at the moment, the president's tweets and press conferences are far more powerful than technical considerations. Now let's take a brief look at the economic data that will be announced this coming week. On Monday, we have the federal budget for July. Tuesday, quite an important day, consumer price index and core CPI for July, and household debt for quarter 2. Wednesday, import price index excluding fuel for July. And on Thursday, a raft of information and data, retail sales, industrial production, manufacturing output, capacity utilization, all for July. We also have productivity and unit labor costs for quarter 2, plus business inventories for June. And on Friday, housing starts and building permits for July, and the Consumer Sentiment Index for August. So an interesting week, especially Tuesday and Thursday, which, depending on how the figures pan out, could be quite bullish for gold and silver, particularly on Thursday. At this stage, we wish to draw your attention to some of the videos we have recently produced, and if you haven't had the opportunity to listen to them, we strongly suggest that you do, as they cover a range of aspects which are today having a major influence on gold and silver prices. We have listed them in the description box below. For example, we have stated for months that gold in particular was offering an excellent opportunity for those dealing in sterling, as the Brexit fiasco was without doubt going to have a major deteriorating effect on the value of the pound. Since the 2nd of May of this year, we have seen gold rise from £973 to the current £1,244, some £271 higher, or nearly 28%. 28% in 3 months is pretty amazing for something which was almost a dead cert. Yes, we were more wary of the dollar value, though the Fed's reversal in policy at the beginning of the year was certainly going to underpin prices somewhat. Trump's trade war with China, which looked as if it was going to be resolved, would have pushed gold prices back down again. But China has not responded in the way Trump had hoped they would, and this factor alone is sufficient to keep prices pretty well supported, not forgetting concerns over Iran, North Korea, and potential impeachment proceedings. Finally, for Inner Sanctum members, we're putting up a new section called Investment, where we produce articles and videos on various areas of investment interest. This will appear later in the week. Although we cannot give advice, We can certainly bring to you the thoughts and considerations of leaders in these fields, and perhaps give a steer of what our thoughts are on these matters. We also produced our monthly webinar last night, which can be found on both the website and our new Discord channel, where 4 of us, that's IS, Controversially Greg, Journo Marcus and Bowman, discuss subjects such as the suspicious death of Epstein, Brexit, North Korea firing 2 ballistic missiles on Saturday, mass shootings and gun control, gold and silver, and the world economy. So if you are an Inner Sanctum paying member, please go to our website or Discord channel and listen to our 2-hour-long webinar. We think it's quite interesting, and some opposing strong opinions were also revealed. If you're not a paying subscriber to our Inner Sanctum, you can join us by subscribing via our website, and the first link in the description below will take you there. Meanwhile, we wish you a most prosperous week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.